All right, folks, I know it might be a little bit depressing for some of you seeing, the stock going the opposite direction I was you were expecting, all right? But I want to share with you something because the reality is when you step back a little bit and you take a little bit of height, you look, past beyond the share price, which I believe is not really the reality of what what the stock should be trading at, all right? So let's just park that aside for just a minute and look at the facts on the transition that is actually happening in the market, which has been crippling up, for the last couple of weeks, maybe months, and now we're just getting confirmation on what is happening, and this is going to be very, very interesting for anybody holding AMC stock and anybody willing to hold this even a little bit longer for a significant amount of upside coming up. All right, so it started with this. We just had earnings on Microsoft and Google, but these are kind of disappointing. But the truth of the fact is, or the truth of the matter is, these companies 10 years ago, up until 10 years ago, were growing at a significant amount of pace every single quarter, like literally quarter after quarter after quarter. These companies will post major earnings because they were growing at an exponential pace. But now things are slowing. Things are slowing. Why? Because at some point, it is not sustainable. At some point, how many more iPhones, how many more amount of computers, Apple computers, desktop, how many more, people on the planet are going to continue to be added to the volume of customers of Amazon? At some point, it has to at least slow down before they figure out another way to add significant amount of growth. The truth is, when you look at the kind of the age growth of a company, there is a startup company, the startup level, and then there is a stage where they start growing, and then they start like a boom, and then at some point, it kind of levels a little bit before the next move, which could be higher or which could be lower. And right now, I believe we are at that stage where after a humongous growth on some of these tech stocks, now it's time to either, for some of them, kind of stabilize a little bit before the next phase of the big growth leg. Now, if you look at the option activity, on the other hand, it confirms this because people are now pricing in the fact that even without, interest rates, these stocks are not going to be the stocks that every hedge fund, every company, everybody on the street, pension funds, 401k, wealth management, and hedge funds are piling up on. Because if you look, just Google the option activity, the amount of puts being placed on Apple, Google, Amazon, Netflix, and whatever. It's incredibly higher than what we used to have. Why do you think is the case? Because in one hand, the pace of the growth is now showing clear sign of slow. All right, so maybe it will be time to unload some of those stocks. But the puts coming on those stocks is a good thing for anybody holding AMC. Why? Because these are the companies, these are the stocks that makes the most of the value of some of the companies holding the price of AMC for exploding. So the further the value decreases, on these stocks, the better it is for us because it puts them in a corner where at some point, the money is going to dry, But you will say, but AC, they have deep pockets. But those pockets are coming from the clients. And the clients, if you hear about what happened to Melvin Capital, are now getting frustrated because if they kept the money in an index fund, if they kept the money in a, regular boring S&P Vanguard, index fund, they will be at the same level of performance than putting the money into hedge funds. And this is without having to pay performance fee or any type of management fee. So you kind of get the point that things are shifting and things are already shifted. So it's just a matter of time. Now, let me share with you another example of this growth slowing down. This is breaking news coming from CNBC or Bloomberg. Robinhood plans to cut about 9% of full-time employees, and the stock is now trading at all-time lows, right? The 52-week low on Robinhood since IPO was around $9.85. We are just 15 cents above that, so far it's down 72% off the highest it's seen this year, around $88, $85 a piece. Why? Why are they cutting almost 10% of the full-time employee. It's because of growth, retail, how many more retail people are going to join Robinhood, especially what happened in January with AMC and GameStop. So at some point, this should have happened, and even after hours, the stock is down 3.5%. So it speaks volume about what I'm, kind of my point here. And my point is, we're getting closer, folks. We're getting closer. I'm not telling you to buy more. I'm not telling you to hold, but I'm just telling you what I'm seeing, and kind of sharing that with you. We don't have to agree on anything, but at least it gives me the kind of, more confidence into now might be the good time to add a little bit. And I'm going to just wait maybe to see where the market's leading towards this week, just to make sure I can add a little bit more to my AMC position that I have in my 2 accounts. So maybe I'm nearly doubling what I initially had last year when the price of AMC was around maybe the 50. So right now, if you want to follow what I'm doing, then, be my guest. But I'm just saying, from what I'm seeing in the market and as a shift and a transition, it will make more sense now to be holding and waiting a little bit longer because it's coming.